The US Treasury bond market today is a fascinating opportunity for investors. Let's find out why. The pandemic spiked US government spending, widening fiscal deficits, and driving inflation up. To counter this, the US plans to end its easy monetary policy, issuing a record supply of bonds. History shows these conditions tend to normalize quickly, with inflation and interest rates cooling off fast. In the current context, the US Treasury securities have faced 3 consecutive years of negative returns. This, coupled with concern on macros due to higher corporate bankruptcies, tight financial conditions involving lending, increasing stress in the commercial real estate sector, growing mark-to-market losses on balance sheets of banks, and rising credit card defaults, we believe that going forward, the Fed may not hike interest rates. With the US recession indicators showing a balance and early signs of inflation moderation, we anticipate a normalization in the US Treasury yield curve, potentially settling around 3%. This shift presents an opportunity for capital appreciation of about 150 basis points in the medium term. Currently, the Indian rupee is slightly overvalued compared to the long-term average, with history showing an approximate 3% depreciation trend. This could potentially serve as a passive return generator for Indian investors. To capitalize on this opportunity, Axis Mutual Fund has launched the Axis US Treasury Dynamic Bond ETF Fund of Fund. The key highlights of this fund are: it is an actively managed fund of fund, specifically targeting segments of the US Treasury yield curve. Emphasizing dynamic portfolio management, it adapts to macroeconomic shifts and trends. The maturity cap of both the underlying fund and the fund of fund extends up to 15 years. Let's highlight additional benefits of opting for this fund of fund. Investing in this fund does not count towards your LRS limit of $250,000, which typically applies to overseas investments, travel, or education expenses. The dynamic and active management approach of this fund of fund is designed to optimize the risk-return profile, adapting to various market conditions and diverse debt asset types. Given that different debt asset responds uniquely to market shifts, a dynamic strategy is crucial for long-term investment success. If you're eyeing the US bond market for investment, the Axis US Treasury Dynamic Bond ETF Fund of Fund presents an exciting opportunity. The NFO period is from 12 December to 19 December, marking the ideal time to invest.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.